Welcome back to another episode of Palisade Radio. This is your host, Colin Cattell. On the show with us today, Brett Heath. He's the president and CEO of Metallica Royalty and Streaming, a company that we are shareholders in. The company trades on the venture exchange under the symbol MTA, and Brett is an expert when it comes to anything royalty and streaming in the mining business. Brett, welcome to the show.
Hey, Colin. Thanks for having me.
We were just having a bit of a discussion before we hit record here, and we were talking about the events of Wednesday, which you aptly named Black Wednesday for the gold and the gold mining shares. Let's start with that. What do you think happened on Wednesday?
Colin, what we're seeing right now is severe capitulation. Across the board, from the metals to the majors, juniors. The pressure is really going all the way down to the exploration companies. We're seeing some of the largest funds being liquidated with Vanguard. We've got most of the majors, if not at 52-week lows, at 5-week lows, and a pretty material break from a number of different perspectives for gold and silver. So, what this looks like right now, for me, and what I think investors should look at is, these are scary times. Gold and silver are incredibly volatile just in general, and the mining stocks are kind of higher beta than that. But what you need to know is you need to know where the value is, and that's what you're seeing right now, and that's what I think you may continue to see here shortly. But it doesn't look like it will be as long-lived as the previous kind of down cycle. I think this may be a much shorter V-type bottom than what we were looking at before.
Brett, it's certainly, I think, hard for mining investors after January 2016 happened, where we started at about 100 on the HUI and rallied up to 260, that just about 2 years later we could possibly be testing those lows again. And we're only about 30 to 40% off those lows with the HUI around 140. Do you see this capitulation continuing to the point where things could get that oversold?
I think so. Unfortunately, it looks like this may not let up anytime soon here. And I think investors need to be ready, and they need to know where to hide. The companies that you do not want to be holding in the junior sector are ones that may have to raise money in the next 6 to 12 months. The setup or the situation that a lot of these companies can be in is a much lower share price and having or being forced to raise money at very unfavorable terms. So there's very few specific companies, especially in the metals and mining sector, that are normally great companies to hold during these times. And I would caution investors to make sure that they understand the value and the financial situation of the companies that they're holding.
And one sector, of course, that has done very well. This brings back to how you're primarily involved in the resource sector, is royalty and streaming companies. I think that a lot of investors are aware that during bear market times and prior to 2016, the royalty and streaming companies were really the only places that survived and then thrived, partially by nature of their cash flow, but also because they're able to sign accretive deals during those periods. Can you talk a bit about the royalty and streaming sector and how you see that participating over the next few months if we do have this sell-off continue?
Yeah, so royalty and streaming companies can benefit from these types of markets. And the reason is because when companies or holders of these royalties see this type of negative sentiment, they finally, just as the rest of the sector, they throw in the towel as well. So these are when real deals are made. And if you look back at the previous bear market that we were in gold and silver from, call it late 20 or mid 2012 through end of 2015, early 2016. You saw the larger royalty and streaming companies cut huge deals, great deals with big companies, and locked in an incredible amount of gold and silver. And when these types of companies do transactions in this type of market, what they're doing is they're giving their shareholders, they're giving their investors a locked in gold price or a locked in silver price at $14 and change, or gold at 12, 1100, wherever it may be, for the next 10, 15, 20 plus years. It's an incredible amount of leverage that is going to be realized on the other side of this. At the same time, these companies are protected for the most part from having been forced to raise money because they get diversified cash flow from a number of different royalties and streams. And these royalty and streams, for your listeners that aren't familiar, are normally looked at as top line revenue. A royalty is just a percentage of revenue. So as long as that mine is in production, the gold price may drop down to a level, or the silver price may drop down to a level where these companies are marginally profitable. The royalty and streaming companies still have that built-in margin, still have that guaranteed margin as long as the mine is still operating. So this really puts these types of companies in the driver's seat in this type of market, and that's really where you want to hide.
I guess what you're partially insinuating about companies throwing the towel in is that from your conversations with people inside the business, you're noticing a sentiment change in the very recent sell-off. Is that the case, or how are you gauging people's companies' desire to go into these kind of agreements?
That's exactly it, Colin. The sentiment has changed, and it's actually changed drastically from just a month ago. What we've seen over the last year and a half, 2 years, is gold trade in really a channel. And myself included, along with a lot of other fund managers in this space, agreed on what it looked like after much more of a longer term bear market from 2012, that we were going to get a breakout. It was looking like gold and silver were setting up to make a very nice run. When that switched, all of a sudden the tune of a lot of issuers changed, because a lot of issuers thought that during a breakout or a breakout of the gold and silver price, capital would return in a meaningful way back to the sector, and equity would be by far the cheapest means of financing. This move has caught a lot of issuers off guard. They did not expect this, and now they're in a position where most of their stocks are down already 20, 30, 40% of where kind of negotiations have been happening over, and a lot of them are going to be pretty vulnerable. So the tune has changed, I would say, across the board. And, I think this is going to be a great time, not just for Metallica as a royalty and streaming company, but the rest of the sector as well.
Brett, it's probably worth going over, and I don't like to get too promotional on the show, but it's worth going over Metallica royalty and streaming and what you guys have put together so far and plans for the future. Listeners might remember Doug Casey on the show several months ago talking about Metallica, and afterwards the company had quite a run up, and I believe Doug is one of your largest shareholders still, Brett.
Yes, Doug is a large shareholder of ours. He's a great supporter of ours, and he understands the royalty business better than most people. Metallica is only been around for a little less than 2 years. In fact, September 1st, coming up here in a couple of weeks, marks our 2-year anniversary. And just to give a high-level recap, the last 2 years, we've completed 8 transactions. We've acquired 21 royalties. We've got production that will generate something in the range of $7 Canadian million for this next fiscal year. We've got development assets that should generate, we're projecting another 5 to 10 million over the next 5 years, and that's annually once they're in production. And then we've got an expansive exploration portfolio in some of the top mining camps. We've been able to build this up by following a slightly different model than what the other royalty and streaming companies have done. For your listeners that aren't familiar, typically what happens in this type of model is there is an upfront payment, usually for project financing, and in exchange for that, the royalty and streaming company gets a percentage of revenue via royalty or a metal purchase agreement, which is the streaming structure, where you can buy the metal at a below the market price. What we're doing, or what we're focusing on, is we're focusing on the third-party royalty holders in this sector. And so what that means is these are existing royalty holders. A lot of these royalty holders have held these things for 10, 15, 20 plus years. And moving these royalties in these private structures, or from major mining companies' balance sheets, or from exploration companies, or from private equity funds, whatever it may be, whatever the holder is, maybe the billionaire that holds it personally, into a very focused royalty and streaming company, there's a significant revaluation that occurs. And so that's what we're doing, and that's what we're targeting. But more importantly, focusing on these third-party acquisitions and using this has allowed Metallica to give our investors exposure to some of the top operators in the world. We can do this because these royalties were, let's say the project was discovered, it was optioned by a junior, the major came in, took out the junior and built it. So now we have a way as a junior company to get exposure to build a portfolio of some of the top operators in the world, very similar to our much, much, much larger counterparts, yet maintain a much higher growth profile going forward. So it's really been a model that we've been able to prove out. It's, I would say, extremely scalable, and Metallica, as a company, I think is set up to capitalize on this, over the next 2 years. And right now, as a company, we're pretty far below the radar. We're not really on the screen of the big institutions yet. We're still working to get coverage from the banks. All of this is going to happen as we grow our portfolio, as we grow our cash flow, and we continue on this path. So this is a chance for investors to not only get a great growing royalty and streaming company, but also get one at a discount, given that most of these types of companies have been spun out from the past, and also receiving monthly cash flow.
Brett, congratulations on what you put together so far. It's been a lot of hard work and pretty incredible. You can see that you guys are trading at a 52-week high, while most companies, as we talked about earlier in the interview, are trading closer to a 52-week low. And with tough times probably to continue, it's certainly going to be good to be able to weather the mining storm in the right kind of equities. So with that being said, I appreciate you coming on the show today, and I'm kind of hopeful that your prediction on the prices of these mining stocks continuing to drop is wrong, but I think that a lot of people are feeling inside that, after Wednesday, there's probably a little bit more pain to come before things turn.
I think so. I mean, this is the hardest market to forecast, I think, by far, out of any market. So, what you need to do, and what listeners need to do, is they need to know what they own. They need to understand the value, and they need to be able to act upon that information, not on fear. Fear is when investors get killed. When they act upon the fear, when they use the fear to the advantage from other investors, is when real money is made. And that's what everyone should be looking for as of today.
Wise words. Well, many thanks for coming on, Brett.
All right. Thanks, Colin. Thanks for having me.
think you understand the junior mining sector, and you think that the participants in the mining sector, junior mining sector, are good people and kind people, hit the bid.
How violent that term could be, it actually could be quite violent. It could be a rip-your-face-off uranium rally.
And the world is always going to need raw materials. It's going to need copper and gold and nickel and so forth.
Totally destabilized. Hey, Troll, did you hear what's going on in Yemen?